Hello, everyone. Good morning. Good morning. Thanks for joining us again. Another exciting section here, morning market review by Rally Trade Rally Academy. We try to give you tips and tricks about the market every day, 8 a.m. in the morning, one solid hour of market analysis. So, guys, sit tight, relax. The analysis will be coming to you blow for blow. My name is Emmanuel Dogu. I'm glad to be here, guys. We have just few numbers right now, so let's give a little time for more persons to join us. I want to believe you guys can hear me. So just a little time, maybe 2 to 3 minutes, we'll check back. Let's get more persons in, call your friends, family. You can even call your village people to come and join us. All right, guys. So we'll start in maybe 2 to 3 minutes, okay? Thank you very much, guys.
Thank you, sir. You are welcome.
So guys, I think we can continue now. I think we have good numbers right now. Trying to get more persons in. The door is open so that you guys can come in. All right, once again, this is our morning market review, Monday through Friday. We do this 8 a.m. in the morning. I call it one solid hour, one unbeatable hour of market analysis. And when I say market analysis, we look at sentimental analysis, we look at technical analysis, we also look at fundamental analysis, right? All of these to give you tips and tricks, guys, how you can be able to navigate successfully through this market, right? And I'm sure you guys are already navigating successfully, right? So just to add to what you're already doing, add to what you already know, some further tips and tricks. All right, guys. So I'll just share my chat right now. I'm going to believe you guys can hear me, or let's do a little sound check now, right? But I believe you can hear me now. I believe. Yeah. I've seen your response. I'm seeing your response, right? Wonderful response. All right. So let me share my screen. Let's start from the fundamentals, guys. Let's start from fundamentals. By fundamentals, I mean let's start by seeing what the news is telling us. Okay, the big moves we are expecting for the day. So really, whenever we want to look at trade, we like to look at the fundamental first, right? So that we can uh, prepare for the big moves, right? Big moves. So big moves equals or is equivalent to big profit, right? So really what we try to do in this market is to position ourselves for those big moves, big moves, big moves. Are we really going to have big moves today? By big moves, I'm talking about increased volatility in the market, right? And volatility is simply the rate of change of price. That's what volatility is about, the rate of change of price, right? So when we have big moves, we pushing ourselves for making big profits. So let me share my screen, guys, so that we can do all of that. So there are some traders that don't prepare for big moves, okay? Don't be that kind of trader, okay? So if you don't prepare for big moves, it means when the big moves are out, certainly those traders will get to regret. I wish I was there. They will get, or maybe they have a running trade and then they never anticipated the big moves. So that big move, those big moves might now be maybe running against them. So you don't want the market to actually run against you, right? And you want it to run in your favor. Of course, big moves can equally run in your favor. Now, if big moves run in your favor and then you don't make the most out of it, it's another form of not taking good advantage of a big move. Let's say you trade with your regular loss size, right? And the market does big moves. You make some profit, but you'll be like, just this 50,000 naira. What if I have taken advantage of it? Should have been up to maybe 500,000 naira, for example, right? So you want to acquaint yourself with big moves. So one of the websites we normally check for big moves is forexfactory.com. You can use investing.com. You can use tradingeconomics.com. Now, all of these are websites, right? Our website, okay? You can equally use myfxbook.com. So there are several websites you can use, right? I love this one, Trading Star. Trading Star is a very beautiful website too, right? Okay, so let's keep it simple. Let's keep it simple. Let me share my screen, guys. Are you still with me? So I've shared my screen right now. I'm looking at forexfactory.com. Forex Factory seems to be the easiest to explain so that we can move very fast to other things, right? So that's where we are on Forex Factory. So this is Forex Factory, actually www.forexfactory.com, right? So you take you straight to the news for that particular day. As you can see, today being the what? Uh, today, September 11th, right? Blessed day of the Lord, right? So it will show you the news for that particular day, as you can see. So, which is good. But then if you want to see the news for the entire week so that you can prepare for it, I'm trying to zoom my screen so that those using phone to join us can equally get value and see everything, okay? Okay, so if you want to see the news for the entire week, so you click on this word calendar, right? It shows you a calendar actually at the top left of the of your screen. Then you get to see the news for that particular uh, week. Okay, so I've been able to zoom my screen. I'm sure you saw everything very clear. Why zooming in? Okay, so this is today news. As you can see, we have a lot of red news for today, right? So our attention is usually drawn to the reds. So the reds are the big moves, guys. So another word for fundamental is big moves. Big moves. We are looking for big moves. Okay, quickly, this is the date of the news, right? For those who are joining us for the first time so that they can get value too, right? Date of the news, right? This is the time of the day the news is released into the market. And of course, the currency, right? The currency, or if you like, the domestic currency of the location where the news is coming from, or the country where the news is coming from, as you can see, right? So the currency you see here tells you the currency that we're expecting the big moves on, okay? Big moves, big moves. Then of course, after the currency, we have the impact. The impact is the big moves, is the big moves. I've mentioned that word like close to 10 times. Oh my God. But seriously, impact is the big moves, right? It's the big moves that we're expecting. So impact talks about volatility of the market, right? Volatility. So another word for impact is volatility. Oh, wait a minute. We just called it big moves now. So another word for impact is also big moves. So the red ones are actually the big moves of the market. The yellow ones are the low impact news. I don't want to call it small moves, right? Low impact news. Then of course this color, what do you call it? Brown, right? Brown color is actually medium impact news. Oh, okay. You can even see the caption there, right? Medium impact. So actually our attention is on the red impact, right? If you like, the big moves of the market. So we have one big moves already out. That's on New Zealand dollar. I'm sure the market must have rocked very well, right? Then, of course, we have fast forwarding to 1:15 p.m., right? 1:15 this afternoon. Man, we are going to have some really big move, right, man. So we have the main refinancing rate here, right? Refinancing rate, that's for short-term interest rate, right? So then therefore we're expecting some short-term interest rates release in the markets. We call that main refinancing rates, right? But remember, it follows through by the ECB press conference, right? So whenever you have a press conference following a particular news, it simply means sometimes the short-term interest rate can be priced into the chart. Price in simply means the movement of the chart can actually be able to swallow or overshadow, that's the word, overshadow that short-term interest rate. So that's what we mean by price in, right? Price in. So this short-term interest rate can be priced in, but the European Central Bank press conference trying to explain how it will affect long-term interest rate. Long-term interest rate can not really be priced in, right? So it is what leads the market or what leads the charts. So I'm trying to say the speech by 1:45 p.m., right, will most likely going to be the strong move of euro, right, by 1:45. That's 30 minutes after the main refinancing rate, right? At that same time, there will be some press monetary policy statement. There will be some statement, right, at that same time, 1:15. But I'm trying to say the big moves, right, the one that can swallow because this particular ECB press conference can be able to overshadow whatever is said here. Okay, so I'm trying to say if you don't see any moves conclusively, if you don't see any good big moves, let's use that word, by this 1:45 p.m., it simply means you wait for, sorry, 1:15 p.m. That simply means by 30 minutes time, you come back to the chart again, you will see those moves. Okay, so what does it mean for us? It simply means if you have, we don't really know the rate direction, the direction they will want to cut or hike the rate to. So what it simply means for us is that if you have a trade running, it simply means that trade should have stop loss and take profits. Most importantly, you want to be on your chart, right? So that you can take advantage of the spikes, especially on the lower time frame, like 1 minute time frame, right? 5 minutes time frame. You can quickly jump into the market, make some profit for yourself. Of course, you'll be good, okay? Now, another big moves we're expecting is on the dollar. So today is a day for euro, big moves on euro and big moves on the dollar. So you would expect Euro USD to give us some crazy move for today, right? So because we're having strong movement on euro, also strong movement on dollar, right? So if dollar comes out very strong for today, I mean, if the news on the dollar comes out very good, it simply means we'll be expecting a lot of downward movement on the euro, right? On Euro USD. Of course, Euro USD has been on the upward direction for some time. So this would be an opportunity for a downward movement, guys. So that is what I am thinking, right? So this would be an opportunity for the market to trade to the downside, right? To trade to the downside. Now, okay, let's go back. So we have CPI for today, guys. CPI makes some noise, guys. CPI, the CPI that we have been expecting. Now, actually, there are two moves, right? Big moves on the dollar that actually shake the market very well. And those are NFP and CPI, right? NFP and CPI. CPI, Consumer Price Index, right? Right. So in this particular news, we get to measure the total value of hold on a bit. It measures the change in the price of goods and services purchased by the consumer. Okay, so it measures the changes in prices. So that means it is a particular tool used to measure inflation, right? So PPI also used to measure inflation, but the one from the consumer holds more effect, right? So the CPI for today, we are looking at it from the core CPI, excluding food, energy. We're looking at the main CPI. These two are the main CPI. This one is month on month. This one is year on year, okay? Then, of course, we have the unemployment claims, as always, right? As always, once in a week. So, guys, these values are going to rock the market really good. So, it coming out good for the dollar, man, the dollar becomes very strong, right? So, of course, just the way the market moves now, so it will be an opportunity for the dollar to gain some strength because it has been losing weight. However, if it comes out bad for the dollar, man, the dollar continue to plummet, right? Plummet down, 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 down. Okay, so you just want to keep your eyes peeled at 1:30 p.m., right? So that you can be able to catch these big moves of the market, guys. Big moves. So for all I've said, guys, today is a day where the market will rock. It will rock. It will rock. It will rock. I don't want to miss it, guys. You want to make some money today. Use some big lot size to trade today, not small lot size. For example, if your normal lot size on your account is 0.05, 0.08, 0.1, when you see big moves like this, okay, you want to go all in, right? But don't forget to put your stop loss in place, fund your account, put more money into your account, deposit more so that you can use that opportunity to trade bigger and, of course, make more money for yourself. So, guys, I think that will be all for fundamental. I think we actually use up to 15 minutes explaining it. Okay, quite good, quite all right. So as we are doing all of this, you have some specific questions, you have some trade running on your account, you want us to look at it, you want us to talk about it. So guys, you can just drop it at the comment section, right? I want to believe everybody knows how to use the comment section, right? So just go straight and chat and drop the message from time to time. every 5 to 10 minutes, I'll just quickly go and check what you have said. Check the instrument you want us to analyze. If you have a running trade, don't forget, you say, Emmanuel, what's happening on GPJPY? I have a trade there. Oh, can you help us look at it? Something like that. If you don't have a trade and you wish and you have affinity for a particular, I love it. I like that word, affinity. You have affinity for a particular instrument. Say, Emmanuel, can we look at this particular instrument? I'm sure, will it continue to go up? Will gold continue to rock? Are you sure is there experiencing some downward movement? So all of that, look at it, okay? So guys, let's switch over to the chart right now so that we can do some technical things, right? So why on the chart? That is where we get to show you the market moves directly on the chart, right? Then of course, see how we can employ some tricks on how we can gain some short-term moves, right? Some short-term profit and of course some long-term profits, right? All of that on the chart. So the analysis on the chart is simply technical analysis, guys. Technical analysis, and the kind of one I do is market structure analysis. So we'll try to look at the structure of the markets. Okay. So I will share my screen right now. Okay, so guys, I've been able to share my screen. Can you see my screen? I'm sure you can see it right now. Okay. So this is my screen. Of course, let's start from Euro USD, right? This is good actually, but I wouldn't like to start from gold. Do you want me to start from gold? We have good traders in the house. Okay, let's do Euro USD. Like my custom. Don't forget my custom. I have a custom here, guys. So Euro USD, let's see what this instrument is doing. Okay. So I said this instrument has been strongly on the upside, right? It's trading around 1.16 right now, 1.16, 1.1691 right now. So and if you look at this H4 time frame, this is actually still on an upward movement, right? So input to the upside, retracement to the downside, input to the upside, retracement to the downside, right? So see what I mean. See what I mean. See what I mean. Let's start from here. Inputs to the upside, retracement to the downside, right? Impulse again to the upside. If you watch these two highs, are almost the same high, right? So I call that relatively equal highs. Relatively equal highs. So, and of course, whenever the market gives relatively equal highs, it becomes a magnet, right? I call that a rail. Relatively equal highs. So the market paints for you relatively equal highs. That shows that there is a lot of target liquidity trap at the top there. Okay. Let me even write it for you so that not be that I'm talking too fast, right? Where is my T? Okay. So this is relatively equal highs. I call that a real, right? So that's a relatively equal high. So whenever the market paints for you relatively equal highs, hey, okay, that is a magnet. That's a magnet. By magnet, I mean the market will soon crush it, right? The market will soon crush it. The market is soon, and of course, it did that. The market quickly. So one way you trade the market successfully is to also don't just stick to the lower time frame, right? 15 minutes, 5 minutes, 1 hour. Also look at this one, H4 time frame, right? Such that you can use it to catch some big moves on the market. So this is a relatively equal highs, and of course, guess what? Now, it simply means, by all means, the market will be drawn to that point, right? So how was the market drawn to that point? Let me show you. it gave us some sign that it was going to that point. So it gave us this high, we call it internal structure, right? So this is an internal structure, right? But if you watch, that's a high, right? Then of course it's retrace, and of course after every movement to the upside, we expect a retracement. You notice this retracement did not take out this low. It stopped somewhere here, right? Did not take out this low. That simply means this low becomes a strong low. So we have a strong low here that has to be destroyed, that have to be violated for the market to officially start moving downward. Of course, it retraced a little. Then of course it beat this high, right? The market now traded upwards with strong candlestick. Let me show you. Let me zoom in so that you can see. Can you see these candlesticks? One green, another green, another green, another green, another green. That tells you where the market at. Now, this 1, 2, 3, 4, 5 tells you the whole story you need to know about the market, right? That, hey, the momentum is really very strong. Very strong, right? Now, of course, that movement, 1, 2, 3, 4, 5, was able to achieve something. What did they achieve? It was able to trade above this high, right? So that tells you that, hey, this relatively equal highs, the market is coming for it. I don't know whether I'm making sense, guys. Are you guys getting value? Okay, you say, Carl, you say you have a running trade on US 100 and gold. Please, can we look at it? Okay, now also specify whether that your trade is on profit or on the other side. Okay, also specify whether it's on profit or on the other side. So guys, this is the best way to go about this market, right? Whether your trade is on stop loss or is on take profit, always smile, okay? Laugh it out. Most person once their trade hits, stop loss, they're angry. No, you smile, you laugh it out, guys. Okay, USDJPY. Okay. You see, you're the one giving me the instrument to analyze, which is quite good value. Okay, you say you're getting good value. Okay, let's continue. More comments are coming in. So if you look at this candle, 1, 2, 3, 4, 5, just like I said, you can see that there's a lot of momentum pushing upward. So it was able to take out this one and achieve this objective by bruising through this high. Now you notice after taking out this high, you saw how it retraced, right? So that means that was now continue to taking out the high. It was all bullish candlestick, right? See, it finally destroyed this high, this relatively equal high. It was all bullish candlestick, man. So that means the objective was to take out this high. So from time to time, regardless of the chart that you're trading, don't be filled with emotion while trading. Go to the higher time frame like H4 time frame, look out for relatively equal highs, and of course you can see that the market will actually go back to that point. But one of the challenge traders normally have is instant gratification. Since it's not happening now, they don't care. No, you don't do that. Right? So you can catch a particular long-term signal. By long term, I mean something that will happen in the next 3 to 4 days. And plan towards it, guys. And plan towards it. Most trader, if it's not happening, if you place a trader, it's not giving profit, then you are not a trader. Come on. The moves of the market that gives sustainable good profit does not happen just in a day, guys. Like this whole chart you're looking at right now is about 3 weeks price action, right? Even more than 3 weeks, right? 1, 2, 3, 4. That's close to 1 month price action. So, guys, change your perspective on that, okay? So you notice after taking out this high, what happened? It actually retraced, right? And of course, smoosh this high, take out this high to form another new high. That one. So to form another new high. Then guess what? Can you see these loads of red color candlestick here? 1, 2, 3, 4. Now, this whole movement was able to take out this low to form a new low, right? It took let's measure it. See now, this low, you can see this low is lower than this low, right? So it took this kind of 1, 2, 3, 4 candlesticks, right, on the H4 time frame to take out this low, that means that move coming down was a very strong move, right? Was a very strong move. So it took out this low to form a new low, right? Then of course we now had to retrace a little bit to the upside. So depending on what that news will most definitely look like, right? And of course, you remember there is news on these both instruments, right? And let's check again. I think is it at the same time? Okay, 130, 115, 130, 145. Wow, it's going to really rough. Just 15 minutes apart, right? 15 minutes apart. So actually there is news on euro and on the dollar, right? The first news comes up on euro, right? 115. Then of course dollar takes the stage, 130. Then euro takes the stage back again, 145. Man, it's going to really be sweet, man. So let's do small. let's let's just analyze this technically. I am seeing a fair value gap right here, and of course, it's actually formed by the same candlestick pattern, right? So that simply means if the price is going up for today because of the news, it will fall inside this area. It will come inside this area, then from here, it will now want to fall down again. Okay. So that's a fair value gap. So if for any reason, I'm talking about the news, right? If for the reason of the news, the price move up aggressively, so this is where it will most likely want to get to, right? This is where it will most likely be targeting. So if it targets inside, then from here, it is still a sell opportunity. Don't forget, we have taken out this low. We have taken out this low. So officially, this market looks strong on the downward side, right? On the downward side, the downward side, on the downward side. Even if you look at the market activity for this week. So currently we are still trading below the low, right? We are still trading below the low. We have already taken the liquidity resting above the high of last week. So the market have taken the liquidity resting above the high. So that means the high we have right now is higher than last week high. Okay. Okay, let's rush and leave this euro US. But I want to believe you guys are getting some value. So if for any reason, the reason of the news, the market goes up, I'll be targeting inside here. Then from here, it should be able to fall from there, right? So even if the market moves up and enters inside here, it should be able to fall from here. And of course, to take out this low. Okay. Now that's a kind of long-term analysis because it's a H4 time frame. Let me drop down to 15 minutes time frame. Let's see what the market is looking like there. Okay. So on the 15 minutes time frame, guys, on the 15 minutes time frame, let's see what we have here. So currently we are rocking a support. So you can see that's one way you do analysis successfully, right? You drop down to another time frame so that you can get different perspective in terms of the detail available, right? So of course, the lower time frame carries more detail of the market. So we are rocking the support right here. So that means we cannot sell, right? So we are only going to wait and see what the news has for us, okay? So, but if the market breaks this support, don't forget, if it breaks this support, then of course we should be selling, right? We should be selling. But if it rallies up, right, from now to 115, 145, 115, 130, 145, if it rallies up, of course, it means the news wants to take it further into this our fair value area, where of course it should start coming down. So the long and short of the whole story is that news will make the market to move in both directions, right? The market will most definitely move in both directions for today. It will move up and move down. Or it will move down and move up. Anyone. So just keep your eyes open and of course peeled by that particular time. So this Euro USD, let's do. So we are actually not taking any instant trade there. So let's look at GPUSD. So GPUSD looks a little bit different from what we have on Euro USD because on GPUSD, on H4 time frame, we have broken this high, which means we have tapped liquidity above this high. We are now doing some retracement, but if you notice, we have not taken out this low, okay? This intermediary internal structure low. We've not taken out this low, okay? So therefore, the market is pretty much looking really more bullish than Euro USD. Okay, so GBP USD is looking more bullish than Euro USD. And if you watch carefully, that fair value gap we saw, remember GBP USD, Euro USD, they have some things in common, right? So they have their denominating currency to be the dollar. Okay, that simply means both of them does a lot of moving pretty much in the same direction. Okay, so this particular fair value gap has already been tapped, right? This one has been tapped. The one on Euro USD have not been tapped. So you can see this fair value gap, right? Drawn into the future, remember a fair value gap is actually a three candlestick pattern. So this is the candlestick 1, candlestick 2, candlestick 3. This is the middle of it. So if you notice, the market had already retraced back into it, right? And even smashed it very well. And even smashed it very well. So we saw this on Euro USD, but it has not been tapped. But on GBP USD, guys, the market have tapped that area. And of course, we have actually taken out this low. Okay, so for the short term direction, we have taken out this low because this is TH4 time frame. So I'll drop down to a 15 minutes time frame. I'll drop the chart down. Okay, I'm not the one going down. I'll drop the chart down to 15 minutes time frame. Then, of course, so on the 15 minutes time frame, if you notice, the market have smashed this low, right? The market have smashed this low. The market have smashed this low. That simply means, hey, there is a force pushing it downward, though. Even for today, now, even right now, the market is trading below the opening price. Okay, so that means for a short-term trade, for a short-term analysis, for a day trader, for a scalper, right? So right now, your directional bias would be to sell. Don't now take note for a short-term trade, or if you like, for a scalper, because we are trading below the opening price, right? So you just need to look for some levels of resistance. So of course, opening price also always serve as a strong level of resistance. And if you notice, the market have smashed these local supports, which means support turn resistance. You agree with me, guys, that once the market smash these local supports, so support turn resistance. So if you watch carefully, the market is trading right now below those supports. Of course, it is now a resistance. So for me, the direction for today would be most definitely to want to go down, but then it is subject to whatever the news will come out to be, right? It's subject to what the news value would be, but I'm looking at the downward movement, right? I would like to look out for reasons to sell, reasons to sell, reasons to sell. Okay. Okay, I think I've done this, my two darling currency pair, Euro USD, GBP. Now, let me now look at the comment section so that we'll start analyzing what you want us to analyze, okay? We'll start looking at so I think I have some comments here. Carl, Carl say it is on the other side. Carl, what is on the other side? What is on the other side? Anyway, the grass is always green on the other side. He said, please check Euro JPY. Beautiful. Who is that person? Michael. Beautiful name. Ude. Michael, where are you reaching us from? Are you in Lagos? Are you in, by the way, I am in Benin right now. I'm in Benin right now. So if you have your friends and family that are equally in Benin, tell them to come around. They should come to Vichy Gate. Okay, okay. Michael, you are in Enugu. Beautiful, 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 very beautiful. I'm glad to know you are trading all the way from Enugu, right? So if you have your friends and family in Benin, we have one powerful event right here in Benin. Very powerful, life-changing, life-transforming, right? Life-renewing. So get them around, guys. Get them around so that they will come, okay? So for Kalu, excuse me, for Michael said we should do Euro JPY. So let me handle let's start from Michael, right? Euro JPY. So I like the instrument Euro JPY, man. You also like the instrument Euro JPY. Euro JPY, GBP JPY, my choice instrument, right? my choice instrument. As you can see, I already have a trade there, right? I think I gave this trade also to one of the clients in Port Harcourt, right? I said buy Euro JPY, buy GP JPY. The same movement should be happening on the two. Buy Euro JPY, buy GP JPY. Just buy it. Okay, but let's analyze it, right? I already have a trade on them, but let's analyze it. So you can see my own trade here. Okay, let's just start by analyzing why I took this trade, right? Okay, very simple. You can see this is a very powerful upward trend right here, as you can see. Hmm? This is a very powerful upward trend right here. So the market only came down so that you can make sure it has tapped the liquidity resting just below all of these lows, right? And so the market came down to those areas to tap it, to tap it, to tap it. So it came down this move. So this moves right here. I don't know whether you can see my screen very well. This moves right here. This downward aggressive move came down such so that it can destroy all of these lows. By destroy, I mean so that it can tap a liquidity resting just below these lows. See what I mean? Just at the lows, at all of these lows, we have a whole level, a whole lot of liquidity resting there, right? So the market have taken all of that. It did a little movement upward. It came down again. You notice this downward movement this time around. You notice this downward movement this time around failed to trade lower than this low. That means this low must be a very strong low, right? Very strong low, right? But furthermore, to authenticate that the market is strongly moving up, but we need to take out this high, right? So guys, once the market takes out this high, man, that is remember this high is an internal structure high, right? So once the market take out this internal structure high, man, the way the market will use to take out this high, and of course, it's already going there, beautiful. So I have my stop loss just below the strong man. Oh my God! For religious people, you understand what I mean by strong man, right? It's a, if a strong man have keep his goose, those goose are in safety. Is it not? So this my stop loss is in safety until a stronger man comes. Oh my goodness. I'm not expecting this stronger man. All right. That one is for fun right now. So I'm going to say these moves that actually took out all of this low. It's a strong move, right? So I place my stop loss just below that low. But see, one thing you can take from this analysis is that there is a stop loss, right? There is a stop loss. So I am actually buying, right? So I am expecting another big dangerous movement that would be big enough to actually sorry, that would big enough to actually take out this high because the market needs to return to take out this high to form a new high, right? Mm-hmm. So this one is market is very hungry for liquidity. So I am actually buying. I'm actually buying. Now you said we should Michael from Enugu. He said we should look at Euro JPY. So that's what we're doing right now. So it is actually a buy for me, right? It's a buy for me. And this buy is a long-term buy, right? But let's look at the short-term analysis. I don't know whether you have a trade on it though. Let's look at the short-term analysis, right? By short-term analysis, I mean I will now drop further to 15 minutes time frame, right? So on the 15 minutes time frame, it is very obvious that this is a support. So, and of course, trading 101 now, as simple as that, 101 on a support you want to buy, right? Now, for if you notice, the market is heading towards this level we call a resistance, right? This level we call a resistance. Of course, it's a local resistance. So two things I'm expecting. I'm expecting the market to drop a little bit from there and, of course, smash the. I'm expecting it to take out the resistance. So it's actually a buy. It's actually a buy. So you can join me to and buy, but you're not buying immediately, okay? The reason why I say you're not buying immediately is you're not going to buy at this resistance, guys. So that means you only buy if the market can be able to break this resistance. So take note, you are buying Euro JPY, but you are buying it when the market has taken out this high, That simply means you just have to screenshot this. And don't forget, we are also recording this live on YouTube, right? Rally Trade on YouTube. Please, when you get there, make sure you subscribe, okay? So it means if you miss most of these things, you can always go back there, watch it again, take your time, rewind it, watch again and again, so that you can get more value for yourself. So guys, once this high is taken out, by taking out, I mean once the market trade above this high, I'm expecting to trade above that high. Don't forget to. So if it trade above that high, of course, I'll be expecting a little retracement back to read them. From there, you should be able to zoom off. Most persons don't take this kind of analysis serious because it is not happening as we are saying it. But guess what? That's how the market moves, right? The market leads will follow, right? It takes its time. So this is one move. Then the second move is that this resistance should be able to give us some retracement. So if the market, if this resistance gives us some retracement, right? Even if it gives us retracement, I am still bullish. Don't forget. So these are the levels you may want to enter after the retracement. Of course, retracement is ideal for you to enter the market on the short-term moves, right? It's ideal. It's ideal. It simply means the market is offering you some discount. It's telling you, okay, you don't go buy. Okay, come now, I've reduced the price, something like that. So the market wants to reduce price for us, and it does that at the resistance area. So let me show you this area, Michael, all the way from Enugu, right? So you are our VIP today, all the way from Enugu. So this level is one level where you want to buy. If there is a downward movement, don't forget the market gives opportunity. This week's 1, 2, 3 week, right? 1, 2, 3. Don't forget this week came out because of this fair value gap here, and the market has already tested it already. So this is the reason why it came back. It's to smash it. If you watch it, it's properly smashed it very well. However, if the market gives us another opportunity, guys, these two areas, the area where you want to buy. Okay, you can just screenshot it carefully. Buy. I think I'm done with you, go JPY. Mr. Michael, all the way from Enugu, I'm sure you got some value from there. I'm sure you should be excited by now. Okay, if you're not excited, I'm excited for you. Okay. Okay, Michael. Let's move to the next question right here. Michael, you drop a comment. Okay, you're asking, is buy limit recommended? Beautiful now. Beautiful. When I'm trying to say you buy here, that's buy limit now. Thank you very much, Michael. Then let's look at the next person, the next question. Mr. Carlo is saying, with time permit us for all of these questions, Mr. Carlo is saying we should do gold and US 100. Okay, running trade on gold and US 100 on the other side. Okay, on the other side. Mr. Carlo, what do you mean by on the other side? Okay, if you're on the other side, you take a boat now, take a boat, move from that side to this other side. Okay, very well. I understand what you mean. So let me analyze US 100, right? I only have a trade on US 100, but I don't have it. Do I have a trade on gold? Let me check. I think I have one trade on gold. I have a short-term sell on gold right here. This thing gone. Hold on a bit. I have a short-term sell on gold. Remember, see the way I'm calling it to. I say a short-term sell, right? That simply means I am. So it simply means in trading, you should know when you are entering a long trade. By long trade, I mean not buy you. A trade that stays that the market will favor its movement for a longer time. You should know when you're taking a trade that the market will most definitely not favor its movement for a long time. Okay, these two are very, very important. Now, quickly, this instrument, this is a short-term sell, right? This is a short-term sell. Short-term sell because if you look at the trend direction, what can you see? Very strong upward trend, right? Even the blind can see. Oh my goodness. Okay, so this is a very powerful, strong upward movement right here, right? But if you watch, I was able to take a sell, and of course that sell is on profit. Let me show you. See, the sell is on profit, as you can see, right? Short-term sell on gold. Today is 11th, 2 days ago, right? On the 9th. as you can see, giving 60,000 naira. Yeah, 60,000 naira is quite manageable. That one can fill my tank. Oh my goodness, this economy, use you use the whole of that 60K to only feed tank and run it for like a week. Now, but before that week come on, guys, we should have taken another trade again. Oh my goodness. So now this market is actually on a place where I have to close this short-term sell, right? Now, let me tell you why. Very strong upward trend, as you can see. But if you notice, this market, it came down to this level, came down to this level again. What does it mean? It simply means this level is a local. Wait a minute, I'm seeing a fair value gap right here, okay? It's a support, and of course, there is a fair value gap holding it from there, as you can see. So it has reached where I have to close this trade. Now, but this is what I will do. I will simply adjust my stop loss and protect the profit. How about that? Come on, guys. You don't know these things. Now, what I'm doing right here is that if that news came out very good for a dollar, and we see, because this market has really gone up very much, right? So it means there is a lot of liquidity left, right? Left on tap here. Left on tap here. This market, see, the market moves because of liquidity. The market does not like you. It does not like us. The market likes money. Therefore, the money are located below the lows and the highs. Especially when everybody have been buying. Don't forget, all of those that buy have stop loss. The stop loss can be a mental stop loss, as most of you do like to have. That means you're not setting it, or it can be the one that you set, right? Mental stop loss means whenever it gets to a negative that you can no longer hold or bear again, that's when you step in and take the action by yourself. So I'm trying to say gold is still powerfully on an upward trend, right? So this is a support where you most likely want to buy. But of course, if you buy, make sure you put a stop loss, right? Just below this low, right? Just below this low. But if you notice me, I'm selling because it's a short-term sell, right? It's a short-term sell. And of course, it has gotten to where I will most definitely want to take my profit. But then, because of the news, I just protect the profit, right? I protect the profit. So one thing I've come to understand is that you have to set yourself up to make big profit. Write it down. Okay, go and look for pen and write it down. Or you have notes on your phone. Right like this. Set yourself up. Always think of setting yourself up for bigger profit. That means if you have seen profit, think about how do I make bigger profit by protecting this one. Now, those big profit, they are what will take care of the stop losses, right? So that at the end of the day, your head is above water. So I think on gold, Mr. Kalu, on gold, me, I am buying, right? I'm buying. I'm selling and I'm in profit, but it's a short-term sale. Don't forget. That means I'm trading the retracement. So you can trade the trend, you can trade the retracement. But for new traders, for traders that are barely trading below 1 year, I normally advise them to trade the trend, not the retracement. Because it is easier to stay on the trend. For example, see how this trend has carried on for quite a long time, right? So if you have been buying, man, it simply means like one of my clients that sent me a screenshot, man, if you see the way this guy was capping, back, and all of them closing small profits on all of them. All right. So I think I'm done with this analysis. Let's go to US 100. You mentioned to Mr. Carlo, you said we should do gold and US 100. So US 100. So US 100 is another of my beautiful instruments. So my instruments are usually Euro USD GP USD. Of course, that one because of everybody trades Euro USD GP USD, right? Then I like Euro JPY, GP JPY. Those ones are really moving crazily, right? Then, of course, we have US 100 and US 100 and gold. So let me look at US 100. Where's my US 100 right here? Okay, guys. So this US 100. Can you imagine? It looks like that did have close. So there's US 100 here. Okay, this US 500. US 500, US 100. You are good. You are kind. So, guys, this is US 100, as you can see. Let me zoom and zoom and zoom into the area. Very class that we are heading towards this high, right? And the market has smashed that high. Oh my goodness. Trading is sweet, man. Trading is sweet. So we have smashed this high, right? Because you notice the market actually took out this high, yes, last week high to form a new high. Of course, we are actually taking out this high because the market has to destroy all the old highs. So this old high, so that it can form new high. That's the definition of upward trend. So US 100 is on an upward trend. Upward trend, you only look for opportunities to buy. Only opportunities to buy. Let me ask you, sir, is this not an opportunity to buy? See this candlestick. This is actually a bullish pin, right? I know they call it a hammer. Let me call it bullish pin. Okay, so bullish pin comfortably seated on this my 21 period exponential moving average. So this is an opportunity to buy. This is an opportunity to buy. This area is an opportunity to buy. Opportunity to buy. Only be buying this instrument. I'll be making money. But don't forget, always put stop loss, right? So that if market smash through your stop loss, your account is still well protected. So I am still bullish. I am bullish on this instrument. It means if you care to join me, guys, it is to buy. Now let me drop down to 15 minutes time frame, right? 15 minutes time frame. So it simply means for those who want to scalp, you can scalp right now, right? You can scalp there on the 5 minutes time frame. You can see how it's going. So when you see something like this to buy now, you don't even think twice. You just buy. For example, the market have taken out all of these highs, right? All of these local, and it's trading higher. So it took out those highs with this level. It retraced, touching 21 period, and of course move up. Make sure you have 21 period, and of course 50 period moving average on your chart, right? So the markets, the candlestick right now is comfortably seated, right, above my 21 period exponential moving average. Remember, moving average gives you the average movement of price. So the average movement, all of these candlestick you're seeing from candlestick 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, they are all seated above. And when candlesticks are found above the moving average, that's a buy momentum. That's a buy momentum. Okay. So you're only looking out for opportunity to buy. Opportunity to buy is when the market does some level of retracement, right? Does some level of retracement. There are some traders that cannot bear a little retracement on their account, right? That means if the market just retrace against them, 1, 2, 3, they are afraid. Let's say minus 1K, minus 3K, minus 3K, they are their body don't shake. That kind of trade that cannot really trade US 100, I'm telling you. Because when the market retrace against you and your stop loss is still far, your opinion is to leave the trade until it gets to your stop loss, right? And of course, to trade US 100, you need to have some good money, 500K, 1 million naira, 5 million naira, 10 million. What is the money doing in the account? Go and withdraw it from your account and fund, right? Call your account and say, hey, I want to deposit. Fund your account and take these moves. Now, this area I have alerted for you there is the area where you should buy. So, of course, if you retrace to this level, it means resistance have done support again, right? Resistance have done support. So, these are the areas where I am pushing for you to buy. So, I think we have more questions, but it's already 9. And for today, we started exactly 8 o'clock, right? So, you said we should do so I may not be able to cover more instruments, right? I have uh, Mr. Endurance, you say you'll be in Benin Life. Okay, Mr. Endurance, thank you very much for your Benin. I'm going to be in Benin already. Okay, your question is when is the right time to break even on the trade? Beautiful. Once you are in now, it depends on the instrument, number one, right? For example, gold, the way gold is very, very volatile. Let me give you this example. I think on Tuesday in Port Harcourt, a client came to me, right? He said, I think that was his first trade he's taking. He funded 1 million naira VIP, right? He has been attending classes. I taught him one-on-one also. That simply means if you're here and your capital is small, just top it up to 1 million naira, you could become a VIP. Then you enjoy one-on-one training. So I taught him one-on-one. Then of course his first trade was on Tuesday this week. On Tuesday I was still in Port Harcourt. So on Tuesday, he came to me. His first trade was on gold for following the strategy I taught him. The first trade was on gold. So he came to me, placed a trade on gold. And he was buying on that Tuesday. Now, as I'm trying to answer you, he was buying, his profit was already on 35,000. Mr. Endurance, are you still here? Okay, I want to use this story to answer your question, because your question is when is the right time to break even on the trade, right? He was buying, his profit was already on 35,000 naira. Now, despite what I taught him, I noticed on the trade there was no stop loss. Now, and I said, okay, thank you very much for signifying that you're still here, there, Endurance. And I discovered that your trade does not have stop loss, but I taught you stop loss. Is it that after teaching, you will now go and choose the one you want or the one you like? The instructor that is teaching you is telling you to put stop loss. Now, maybe you don't like the stop loss. So, okay, and I asked you, okay, why is stop loss not on this trade? He said, I understand that very well. So, what I'm trying to say is that immediately I asked him to protect the profits. Now, but how can he protect the profit if there is no stop loss? So, what I'm trying to say is that he was like, he's already 35K now. He was thinking the profit cannot reduce. Before our eyes, I think reduced from 35K to 31, right? To 29, 24. I said, adjust your stop loss into the profit above the entry price. The profit reduced to 10,000 naira. I say, you see, 10,000 naira. Say, if you had already adjusted your stop loss to 10,000 naira, that's when the trade would have closed. Do you know before our eyes, the whole profit reduced to zero and enter negative, right? When the trade enter negative, his legs started shaking. I was laughing. Now, it simply means endurance. It simply means it depends on the instrument. That kind of movement cannot happen on Euro USD, right? For Euro USD, if you're on 35,000 naira, it will be hard for everything to just reduce. We're just in the office, just less than 5-10 minutes, everything just reduced like that. That means for instrument that is very volatile, right? Anywhere the price have gotten to, please, you're asking when is the right time. Anywhere the price have gotten to, still protect your profit, right? For Euro USD, it will be very, very hard for in the next 10 minutes for the price to reduce all of the profit and drops down to zero. But you see gold, in next 5-10 minutes, everything reduced. So that simply means it depends on the instruments. Then, of course, the right time is when you're in profit. That profit has really gone far from the entry price, because once you do it before you say jack, if the market price have not really gone far, once you did before you turn your head, before you say jack, the market have knocked you out. So you want to wait until it has gone far enough, as far as on currency pair, maybe up to 20, minimum 20 pips, right? 20 to 30 pips, then you can start protecting your profits, right? But on gold, even though the market have moved 100 pips, 150 pips, 200 pips, 300 pips, still protect your profits. Okay, that's for you, endurance. Of course, you still come to the hall, right? And I will explain more to you. But I cannot stay really beyond now. Of course, this particular section is 8 to 9. So, guys, thank you very much. I hope you got some value from this. Signing out for now, guys. I hope you got some value, good value for this one hour of market analysis. Thank you very much, guys. Let me call my number again, 090-2626-4507. Let me write it, right?